good morning to everybody.
We're here today with Your Property Duo and Lino Contento. Why don't you take it away and introduce yourself, who you are, what you do.
My name is Lino Contento and I process mortgage applications for home buyers. Been in the industry approximately 32 years. And we look after financing from first-time buyers to move up to retired.
And we are both realtors, of course.
Yes, working in resale and also pre-construction in residential real estate only. And in the GTA, mostly along the young corridors or Fort area, Richmond Hill or Newmarket. But we really go as far as Hamilton our clients want to go. We are just dealing with somebody who wants to purchase in the mountain.
Springwater, yeah. Yeah.
Who's, maybe I'll take it away with a few things.
Yeah,
Yes,
yeah,
I
let's
love
start
it.
with mortgage.
Wonderful. So, number of things. For anyone who is retired and looking to make any kind of investment or potentially use the equity of their home, where the big lenders or lenders in general are not looking to finance based on lack of income, monthly income, there is products such as reverse mortgages where, providing you are of 55 years or over, you can use the equity of your home up to 55% of the value to be able to purchase or use the funds for anything you need to. No income qualified is required. The only two things, no monthly payment is required once you borrow the funds, yeah. So there's no monthly payment. And the only two things that you are responsible for and is expected of you is to ensure that your taxes are always paid up to date and there's always insurance on the property. So reverse mortgages, you could definitely pull out equity without necessarily having the annual income and without having the worry of making the money.
And is there a fee involved for that one to set this one up?
So
Besides closing costs?
there's closing costs, legal fees, there's that. The interest rates are a little bit higher, anywhere from 6.99 to 9.51 on variables. But the interest is accumulated, it's not paid, so it's just accumulated on the funds that you borrow. Great solutions for people who otherwise cannot get financing based on
Ideal for
retired.
retired people, definitely.
Definitely.
Great.
And it
Great
can be
option.
used on the investments, as you mentioned before this
The
session.
funds, whatever you want to use them for.
Fantastic.
That's your business.
The other thing, just to clarify in regards to the reverse mortgages, is not that you actually give your house away in this respect after 5 years. If the term is over, I can pay it out.
By no stretch of the imagination are you giving the house. You're borrowing just like you're borrowing with a lender of any kind. The difference between the two is that the lender's taking a monthly payment to cover the interest that's accumulating, where the reverse mortgage, the interest is just being added onto the principal amount borrowed.
Great. Great to clarify
I
that.
was gonna say that there's a big misconception usually that you, with the reverse mortgages, usually I find a lot of people saying you're giving the house away at the end of it, right? That you're like living there without the cost of the mortgage, and then but I guess that's what in the end usually would
So technically, if you want to be technical, reverse mortgage or even simple straight mortgage, the house is not yours either way. The house belongs to the bank until you pay them back the portion that they are owed. But that's even with a regular mortgage. So even if you owe a $200,000-300,000 mortgage on $1 million home, that home cannot be sold without paying the $200,000-300,000 back to the bank, regardless of whether it's a conventional, straightforward mortgage or a reverse. So again, reverse mortgage, identical to the same thing as a conventional mortgage. Difference is no payment and interest being accumulated.
Fantastic, that's super that you clarify it. So, and that is for people over 55 years old.
Must be minimum 55 years of
Yeah.
age. Yes.
Fantastic.
We got another question from somebody also who is interested. They own a one-bedroom unit right now. The value is about 700,000. They're a couple. One of them it doesn't work at the moment, they're looking for a new job and stuff like this, so you know how it is with the probation period and all those things. They have no further savings because everything went into the condo. How would they be able to purchase a house if they wanted to, let's say for instance, borrow funds against this property?
And they are younger than 55, I would imagine.
Yes, yes,
Oh.
young couple,
Young couple, they want to borrow against this property to purchase another home.
Correct.
They would definitely need the income to be able to do that. So, the individual that is not currently working should have employment. Then you can use the 2 employments plus the rental income to be able to qualify for the next property. You can try to extract some equity from the existing condo as a
Line of credit.
line of credit to put as a down payment on the house. But you would definitely require the income. It's going to be substantial.
can we talk a little bit about the difference of line of credit and just taking out a mortgage? Like,
So line of credit is absolutely great when you're doing investment purchases. In today's environment of rates decreasing, definitely a line of credit is a great product to have because it will follow the prime rate. And it is fully open where you can pay it off at any time. If you know for a fact that you could be limited in funds and would rather be a little more structured where you want that monthly payment to be able to pay the mortgage off, you're better off getting it. If you have the capability of adding more money every month, then the line of credit is the solution, definitely.
What are normally historically always a little bit higher than the mortgage rates.
Definitely. Yep, definitely.
Mm-hmm.
But a lot more
Flexible.
very,
Yeah.
very flexible.
Paying it off. Mhm.
and then since we're on this topic in regards to mortgage rates and stuff like this, what do you think, where are mortgage rates going? We have the next announcement coming up on the 24th.
So this is what I have learned over the past year. There was an article that came out probably about 10 to 12 months ago. Let's start by saying rates will definitely come down. They will definitely
I
come down.
believe that too, yeah.
We can expect the rates to definitely come down, and not because they want to, but more than because they have to. And what the article read was, and let's consider this, the highest amount of renewals in history ever are 2024, 2025, and 2026. What is the reason behind that? If we go back 5 years from these years, they are pre-COVID and COVID years,
Yeah.
when it was insanely busy and people were buying like crazy. And what happened was in 2019, people renewed and purchased with new mortgages of interest rates of anywhere from 2.79 to 3.49%. So this year, 2024, as the renewals came up, to have forced Canadians into a rate of 6.25%, 7% was not possible. And that's why this year, you already started to see a little bit of a gradual drop because all of these renewals that were coming up in 2024, they just couldn't renew them into 7% rates.
Yeah.
And so you see rates of 5.09, 4.99, 4.89, 5.59, which is reasonable for the 279, 349 to be able to renew into that level. Because back in 2019, where the stress test was already in place, they were already approved at that level of interest rate. So it kept Canadians in their homes in 2024. 2025 is a little worse. So 2025, we go back 5 years, that's the year 2020, where rates were being offered anywhere from 1.90 to 2.49. And now, come 2025, you better be at the 4.5% rate. Because the 1.90 rate, to renew them into something of 5.5%, it's really gonna hurt and impact
Big
Canadians.
monthly payments for the.
It's going to negatively impact Canadians, especially with the rising prices of groceries and gas and everything else. And now you're doubling, if not in some cases tripling the mortgage payment, will cripple completely cripple the economy.
Yeah.
So both the banks and the government know that these rates do need to come down. The expectation is that in July, we're gonna see a quarter drop and an additional 2 drops by the end of the year, potentially. With further drops in 2025.
Yeah.
2026 is the kicker. 2026, Canadians were purchasing and obtaining mortgages at rates as low as 1.40%. So now imagine renewing these Canadians at 1.4, and 2026, you go back to 2022, that's what they probably paid the highest price. That's where the houses were at its height, the peak of the pricing for homes.
Yes.
Okay, so they paid the highest prices in 2022, and rates of 1.40. They renew in 2026 at rates of 6%, even 5%. They're out of their homes. And the strategy here is that, or the thought process here is that as a Canadian, I'm going to lose my home. He's going to lose her home. He's going to lose her home. But the bank stands to lose tens of thousands of homes. So the house that I bought for $1.2 million in 2022, that's already only worth $1,050,000 currently. In 2026, if these rates are not at somewhere between, let's say, 3.25% and 4.25%, the bank's going to be looking at taking back my home that I purchased at 1.2 million, financed 900,000. Okay, might only be worth maybe 800,000. And now they really have a big problem because now the house that they financed at 900, they can only sell for 800 after real estate fees and legal fees and everything else. They're up at 700,000, or they're wanted by $200,000.
And that wouldn't be only one, that would be all.
Tens of thousands.
Yeah.
The
Tens of
ripple
thousands.
effect,
Yeah.
So the banks are at a much higher risk. We're at risk, but they are at a much higher risk.
They have to adjust.
So we should definitely be seeing rates coming down. In saying that, there is no better time than now, today, right now, before these rates start to do this, to buy something.
Yeah.
I believe that it is a very strong buyer's market today.
Yeah.
I agree.
You're going to get a lot of value for your dollar.
And you have options, right? First of all, there's lots of listings on the market right now.
And you
There's
can afford it.
there's people that really want to sell because of the stress that they have due to the higher rates, right?
Yep.
And then you can negotiate, as Sophia said. So you can put all the conditions into the agreement, which you weren't possible to do that during COVID.
Right.
During COVID, you were pretty much going in
Coming in
firm.
firm, no choice.
No, there was multiple offers everywhere.
Yeah.
Multiple offers everywhere. But furthermore, to add to the pricing being at the lowest level they have been probably in the past 5 years, condos, they say that they're 27-year low. 27 years that the resale of condos has been this low. But it's saying that if you can pick up a property at a really good price right now, because they're really pricing is excellent. Another very strong point is that whatever you purchase is going to rent
So
for
easily.
a lot of money
Yeah,
and
that's
very
true.
easily, because there's a lot of people that are just sitting on the fence. They don't want to buy. They say, hey, you know what? I want to rent. Throw a condo on in the right area. That's where you see multiple offers.
Oh, God, yes. We're seeing that so
So
much.
true. Yeah.
There's so many people renting at very, very high rates.
Yes.
And as you said, if it's in the right area, in the right condo tower,
You do well.
you're set.
Yeah.
You'll do
You're
well.
set.
But historically also, in real estate, if you think about it, homes and condos is always something like this, going up. But it's really sometimes like some years the houses are better, then the next year the condos are better.
It's always
And
a
I think it
question of
always,
affordability.
yeah, adjusts itself a little bit. It's very versatile there, right?
Yeah, definitely.
That's very, very common. Like news, I like this with reducing the interest rate, so I like that
Yeah.
idea. I
That's
hope
good.
that really comes through for a lot of people.
Yeah.
But I think it definitely,
Mhm.
it's not just for a lot of people, it's for themselves as well.
Yeah, it has to happen, right? Yeah. But it's nice to see the mortgage side of, or the bank side of things, right? Because I mean, everybody's always focused on themselves and maybe, you know, the person in front of them, right? But to hear that the mortgage or the banks are gonna be in trouble too, gives you a little bit more confidence in the market as well, right?
Let's also remember what is coming up. Generally, rates always come down right before an election year.
Mhm. Yeah.
Election is coming up, you'll see rates come down.
So, you know, can you do, as a favor, can you talk a little bit about if, I know there are some changes about some government programs for first-time buyers.
Absolutely.
I know there are some changes, so what is available for first-time buyers and programs?
And watch how this is all fitting together. We're talking about rates coming down, we're talking about it's the best time ever to purchase properties right now. But how do you get around the income piece with minimal down payment? Government, and I believe it's coming up in August.
Mhm.
For first-time buyers, mind you, it's for new construction only right now. I would imagine, hopefully, fingers crossed, government makes the change to resale homes as well. But first-time buyers with minimal down payment are able to now amortize their mortgage for up to 30 years,
Mhm.
Yeah.
And what is the minimum down payment?
5%.
5%.
5%, but again, it's for new construction only right now.
Mhm.
Again, hoping that they change it to resale as well. That would really improve things. The
I've
other,
been reading a lot about that too, that lots of
30 year.
people wanna push for it. It makes only sense to include resale on this as well.
well, absolutely, absolutely. I mean, 30 years is not, it's not like the 40, 45, and 50 years that we had once upon a time, 40 years. And the United States had up to 50 years, that's a little bit crazy. But 30 years, I think it's pretty reasonable. And it would allow for Canadians to be able to afford.
Yeah, it brings down the monthly payments, that's nice.
The other piece that the government has changed is where previously, I believe, Canadians were allowed to use up to $30,000 of their RSP as a down payment. They have now doubled it, increased to $60,000
Mhm.
per buyer.
Mhm.
And rather than the repayment to start after 2 years, they've now extended that after 5 years. What does that mean? As a first-time buyer, I'm going in to buy a new home with 5% down payment. I have $75,000 in RSP investments. I can pull out $60,000 of it tax-free
Mhm.
to apply towards my purchase.
Mhm.
And I don't have to start repaying that RSP until 5 years later. So the one full term of a 5-year mortgage,
Mhm.
which gives Canadians a little bit of a breather.
Yes.
Because if they have a mortgage payment and life expenses, plus they have to contribute, you have to recontribute to that RSP, it becomes a little bit strenuous. But like this, given them the 5-year, really helps out. So both of those changes, I think, will really improve for first-time buyers.
Yeah, I think so too, yeah.
And how do people know what is the right mortgage? Like, is it the fixed rate, is
Especially
it
at
the
this
variable
time.
rate? Yeah.
Mhm.
What should people do?
Great question. And
I think everybody has a different answer to this at this point.
not at all. I think everyone is on the same track here. Variable is the only way to go. We're discussing here about rates having no choice but to come down. If we believe that to be true, why the hell would you lock in? And you can go 1 or 2 years, but that's gonna be higher than a variable. So why would you think the 1 or 2 years? Well, the variable rate, 5-year variable, you could lock in at any time. It could be 3 months from now, 6 months from now, a year from now, 3 years from now. So now you catch the rate at an exceptionally good time. Not only that, your variable today, let's say, is at 6.15 as an example, okay? Take it at 6.15, already you know that by the end of this month, we're probably looking at a quarter point drop, so you're down to 5.90. Already closing the gap. 5.90, you're hanging tight. Another half a point by the end of the year brings it down to 5.4. You wait another year or 2, so you've enjoyed a variable rate that's doing this, and then eventually, a year or 2 from now, when you think there's a really good rate, lock it in for an additional 5 years. Now you did 6 to 7 years of mortgages at reasonably good rates. The answer is variable. However, that is going to be short-term loss for long-term gain.
Not for people that wanna buy, sell quick, that's not the market.
No,
for
no,
it right
buy
now.
and sell quick, that's the answer as well, because buy and sell quick, variable, let's not forget, it comes with
For the
always only
tenant.
never 3-month interest payment. Whereas
Don't have
fixed is
such
gonna be
high-
substantial.
That's true, that's true.
Yeah. So definitely a buyer's market, rates are coming down, definitely time to buy.
Let's see. What other questions do we wanna go through here? Got a whole list sent here. Answer for personal.
And we talked about the closing costs in this respect for pre-construction being roughly 3.5%. As long you rent it, make sure that you rent it. It's because if
Get the
the
HST back.
revenue can get the HST back. Otherwise, don't forget if you're renting it, you do have to advance the HST, but you
Yes.
get it back. when it's
As
back.
long as you ask for it.
Yes.
So that's one thing where we have seen some people fall into a trap, they didn't ask for it
Yeah.
back.
Yeah.
Because you have
Many-
to provide them with a 1-year contract, right? And then that's when you get the money back. It might take
It took
running-
me
running
roughly
some of the-
45 days, it
Yeah.
might be a little bit longer right now, but within 45 days I got my HST back
Yeah.
with my rental property, what was 30 minutes.
Mhm.
Yeah, and calculate 1.5% for closing costs for resale.
Resale, maybe a little bit more, maybe a little more than 1.5 on that.
Yeah. Just to get.
First time buyers, I think it's pretty safe to say 1.5.
Yeah, because of the.
If you're buying in Toronto, probably a little more than 1.5, because it's a
Yeah,
double
because
line
of
transfer.
Yeah, transfer tax. Yeah, fantastic. Why should somebody choose the mortgage broker versus bank?
Yes.
I need that one clarified.
Well, and that is a very great question. There's a huge misconception that mortgage brokers or mortgage agents charge fees. We don't. We do not charge fees unless it is an individual that otherwise cannot be approved by anybody else but private mortgages or the B lenders that will not pay us our commissions.
Mhm.
So then in that case, but that would be someone in an extreme situation of no income, bad credit, minimal down payment, all of that. Good stuff. At that point, I mean, obviously, we're putting something together for them. We are working for them, so there's gotta be a fee.
Mhm.
But I'm gonna say 96% of the time, there are no fees at all from a mortgage agent. We do exactly what the bank does. The biggest difference with the bank, and as you both know, I came from one of the major financial institutions, where at the time I had one solution, one bank, one rate.
Yeah.
I now have, this rate in comparison, 68 lenders, 68 solutions, 68 competitors to compete against rate, including some of the major financial institutions. So the difference is, you go to a mortgage agent to ensure that you get the best possible product at the best possible rate.
And the other thing is in regards to the mortgage broker as well, that one credit check, and you use this to shop for it versus
We
if you
do.
go to a bank, each bank will do,
Each bank will pull a credit check, correct.
credit check.
Our one
And they're
credit
hard
check,
checks.
they're hard checks,
Mhm.
and our one credit check will go teach you.
Mhm. So that's a good one.
Mind you, in most cases, we do not even bother sending it to various lenders, because we already know at that time, that month, that week, that day, who the lender is that's offering the best.
Yeah.
But I'll tell you, and again, another difference between a mortgage agent and the bank, we don't stop. Meaning, we're approving the client today, they're closing in 72 days, as an example. From now till 72 days, if the rate comes down, we're gonna send new documents to the client with a new rate, because the rate went down. And that's through DocuSign, obviously, make it simple. I've sent up to 8 different documents to clients, one particular client, 8 different documents because the rate kept doing this.
Beautiful.
And the client was happy because She,
I signed this, no problem.
yeah, she signed each and every one of those 8 documents because her rate was going down and her pay was going down. I went as far as, this is another big one, I called the client on the day of closing. He hadn't signed with the lawyer yet. So I said to him, I said, she said, oh, I'm on my way to the lawyer's now. I said, well, stop, don't bother. Call your lawyer, explain that there's a new set of documents coming because I just saved you 0.30 on the rate. He said, oh, jeez, what's he gonna say? I said, don't care what he says.
Yeah.
At the end of the day, you're gonna be saving thousands of dollars. He said, no, hey, I agree. I said, look, explain to him that even if he has to charge you $500, $1,000 more because he has to redo the paperwork, let him charge you. Because in all fairness, the lawyer did the work and he's doing it twice. So let him charge you a couple $100 or whatever it is. You're getting a much bigger discount. Clients are always, they agree. They say, absolutely, I'm going to explain it. And lawyers are okay with it. Normal.
I find sometimes you also have something in your back pocket, even if you go to the same bank that the client has, sometimes you get a better rate.
Yes.
Because you do so many transactions, right? They offer you some special, some.
Volume. Definitely, lenders will look at the amount of volume that you do, and obviously they want to keep you happy, make you happy, keep you happy, because they know that you're a good book of business.
And that's why it's important to choose a good mortgage broker that actually does lots of transactions.
A reputable.
Yeah.
Yes.
Yeah.
The other big piece that you have to be very, 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 very weary of, and this is both on the mortgage agent side as well as the bank side, is individuals in my industry that may not be completely upfront.
We just spoke about that, yes.
Yes. And you have to be very careful because you can go up to the 11th hour, a day or two before closing, to find out that the bank pulled away from their approval and you're left hanging with a $50,000 deposit to lose and potentially be sued because you can't close it. Very, very careful with individuals.
That's one
client of ours who got really good.
Yeah, didn't wanna go with the recommended mortgage broker.
Yeah.
But it's, in the end, everybody has to choose, pick and choose who they feel comfortable with. But in the end, we always say, please, please, please make sure it's a reputable, mortgage broker, also agent.
Yeah.
Somebody that has been in the business. When we see people, even lawyers, like especially when we do pre-construction, some people bring or wanna bring their documents to the family lawyer that does family law or whatever. It's not real estate, sometimes it is real estate, but they don't know anything about pre-construction. Those distinguish, it makes a big difference what they specialize in,
Make it
right?
professional.
That's why, we
Yeah.
say we do residential only, we don't do commercial, and we do condos and houses and everything, and resale and
Pre-construction.
and leases, of course. We
Yeah.
help people get into homes.
What our office has become very strong at, and we become brilliant at, especially my partner, Danielle, you both know very well. We can turn a decline into an approval the right way, where the client can sleep at night. In some cases, interest rate might be a little bit higher, but at least you can sleep at night, knowing that that transaction will close. So in our office, in all of my years of business, and again, I've been for over 50 years, I've never had to do a phone apart ever. Simply
That says a lot.
because, well, no,
Yeah.
it's simply because you walk the straight line, you walk the right line. Do business the way you're supposed to. I've been offered many times to do business the wrong way, I just,
Yeah.
that's not who I am or what I do.
I was gonna say, stuff like this comes our way too, we're like, you know what, no. Choose somebody else if you wanna go down that path, because we cannot do this.
It can only hurt everyone.
So why don't we wrap it up and maybe, do you have questions you want to fire off?
Anything else?
On a mortgage renewal, should you go to the bank with, you can get portion back to mortgage broker on a mortgage renewal, can you do better than get your qualifications of that mortgage renewal in terms of income, this, and that. The second question is,
So the first one is simple. You should never re-sign with your current lender. Always take a look at other options. Definitely. Yes, the difference, if you're with your lender, they're not gonna need to requalify you. It's a simple signature, but you may not be getting the best offer. If you are going to shop it through a mortgage agent or another lender, you're going to have to requalify. But you're obviously gonna get the best possible rate because they're really eager to get your business. Your business can end. The second question, I'm not sure. I haven't heard of any qualification or not. Is that something fairly new?
Yeah, I heard there was some rules about yeah,
Well, there's already rules, TDSR and GDSR. The gross debt servicing ratio, the total debt servicing ratio. Maybe there's talks about them changing that so that Canadians can afford a little more, possibly. So it could be that, but I haven't heard.
Good question, I like that. Okay, that's pretty much it.
And then I guess, how can people reach out to you if they wanna, get your contact?
Best contact would be to contact the two of you.
Yeah.
Okay.
That we always like.
To do the introduction, because then it flows over to me and we pre-approve them and at least you both know what you do. Definitely if they're looking to purchase, whether the first time, second time, move up, whatever the case may be, always be pre-approved first, always. Otherwise, you could be wasting everybody's time.
That's a good question. How long does a pre-approval take roughly for somebody, depending if they
Have
give all
all
the
the
documents, ducks in the row?
And I'll be very clear about this, it's
Yeah.
very simple. From the time that I receive the application and all supporting documents that I ask for, 48 hours.
Oh, that's pretty fast.
Yeah.
Okay. It's a smart thing to do before you buy, so see your buying power.
Mhm.
Not 48 hours from the date that I received the application, 48 hours from the date that I received the application and supporting documents. So, and supporting documents, very important. You can call me and say, hey, I make so much, I have this much, and I can shoot out a number. But then you come with your documents and everything is completely different.
Yeah,
So documents are very important, very, very important.
and it's good to have everything set up prior to going shopping, because otherwise it breaks your heart too, because all of a sudden you find out you can't afford that house that you fell in love with.
So going back to my comment about a deal that's never fallen apart on me, I am a pain in the butt at the beginning of the process because I asked for a lot. But asking for a lot at the beginning ensures a smooth transaction.
Yeah.
There's no surprises.
We know you're very thorough, we love that.
Yes.
Okay.
Perfect, awesome. So if anyone wants to follow you on Instagram, Facebook, on the social medias of the world,
Lino Contento.
perfect. And for us, it's Your Property Duo on YouTube, Facebook, Instagram, and you can find us on those channels.
Wonderful.
We hope you join.
Awesome. Thank you so much, everyone.
Thank you.
Bye.
Bye.